Ever wondered what Wall Street's favorite stocks could be for 2024? Particularly, how about Nvidia? Welcome to the Stock Genius channel. Today we're diving into a captivating topic, Wall Street's favorite stocks for 2024. We're putting the on Nvidia, a heavyweight in the tech sector that has been making waves in recent years. With the stock market picking up steam, investors confident in the Federal Reserve's decisions, it's no surprise that Nvidia is a top pick. Stay tuned as we delve into the performance of Nvidia over the leading up to 2024. If you enjoy our content, don't forget to subscribe, like, and share our videos. Nvidia's journey has been nothing short of spectacular. This tech giant, renowned for its groundbreaking graphic processing units, has carved out a solid reputation in the rapidly evolving digital landscape. Let's take a brief trip down memory lane to appreciate the strides Nvidia has made. A few years back, Nvidia was primarily recognized for its contribution to the gaming industry. Their high-performance GPUs transformed the gaming experience, bringing lifelike graphics and immersive experiences to gamers across the globe. But Nvidia didn't stop there. Around the mid-20s, Nvidia broadened its horizons and ventured into the realm of artificial intelligence and data centers. This move opened up a new world of opportunities. Their GPUs, renowned for their superior processing power, became instrumental in accelerating AI applications and enhancing data center capabilities. This diversification has significantly contributed to Nvidia's impressive growth trajectory. In terms of financial performance, Nvidia's journey has been a roller coaster ride. The company has weathered periods of market volatility, economic downturns, and shifting investor sentiments. Despite these challenges, Nvidia has consistently shown resilience and adaptability. The company's ability to innovate and evolve its product portfolio in response to market demands has been a key driver of its financial success. For instance, in 2023, despite a challenging economic climate, Nvidia delivered an impressive performance. The company's sales soared, and its CEO, Jensen Huang, became a dominant figure in the tech industry. Nvidia's stock price saw a significant uptick, reflecting investor confidence in the company's growth potential. However, Nvidia's journey hasn't been without its fair share of challenges. The company faced a significant decline in 2022, mirroring the broader market's downturn. But the tech giant bounced back. It adapted to the changing landscape and emerged stronger, setting new records in its financial performance. These past achievements set the stage for Nvidia's promising future. With its strong track record of innovation, robust financial performance, and a visionary leader at its helm, Nvidia is well positioned to continue its growth trajectory in the years to come. The stock market showed impressive resilience in 2023. This was a year where the market saw a bounce back, continuing an upward trend that began in late October. The Federal Reserve played a significant role in this resurgence. The Fed's change in policy, which involved repeated hikes in the federal funds rate and pushing long-term rates higher by shrinking its bond portfolio, had a profound impact on the market dynamics. 2022 had witnessed an 18.1% decline, tracing the Fed's policy shifts. However, the tides turned in 2023. What brought about this change? Confidence. Investors were convinced that the Fed had concluded its cycle of rate hikes. Projections from the central bank even hinted at 3 cuts to the federal funds rate in 2024. This assurance was a game changer. The S&P 500, which had only seen a 3.1% rise since the end of 2021, found its upward trajectory accelerating since late October. This market context sets the stage for Nvidia's performance. As the wheels of the market began to turn more favorably, Nvidia found itself in a prime position. The company's sales had soared, led by the dominant presence of its CEO, Jensen Huang. Nvidia, along with other information technology stocks, saw a 57% return in 2023. This was a stark contrast to the 28% drop witnessed in the previous year. The market trends of 2023 provided fertile ground for Nvidia's growth. The company was riding on the wave of market resurgence, bolstered by a conducive financial environment shaped by the Federal Reserve's policies. With the market rebounding, Nvidia was well positioned to thrive. The company not only weathered the storm, but also used the market trends to its advantage, propelling itself to the top of Wall Street's favorite stocks for the upcoming year. Fast forward to 2024, and Nvidia is a Wall Street favorite. This is not surprising given the company's impressive performance in the previous years. Nvidia's sales have soared under the leadership of its CEO, Jensen Huang, who has been a dominant presence in the tech industry. The company has been riding high on the wave of technological advancements and the ever-increasing demand for high-performance computing. Their graphics processing units, or GPUs, have become the heart of data centers, supercomputers, and gaming devices worldwide. This has not only led to significant revenue growth, but also positioned Nvidia at the forefront of the AI and machine learning revolution. In addition, Nvidia's strategic acquisitions have further boosted its market position. For instance, the acquisition of Mellanox Technologies in 2020 and ARM Holdings in 2021 have expanded Nvidia's product portfolio and opened up new markets. These acquisitions have not only diversified Nvidia's revenue streams, but also fortified its competitive advantage in the tech industry. Furthermore, market trends are aligning in Nvidia's favor. With the Federal Reserve signaling a pause in interest rate hikes, investors are increasingly turning to tech stocks. The tech sector, after all, traditionally benefits from low interest rates given its high growth potential and significant capital expenditure requirements. Moreover, the digital transformation spurred by the pandemic continues unabated, driving the demand for Nvidia's products. From remote work to virtual reality, from cloud computing to autonomous vehicles, Nvidia's technologies are playing a pivotal role in shaping our digital future. Last but not least, Wall Street analysts are bullish on Nvidia. They point to the company's robust financial health, its strong growth prospects, and its leading position in the tech industry as reasons for their optimism. Nvidia's stock has been consistently rated a buy or strong buy by the majority of analysts. Clearly, Wall Street sees a bright future for Nvidia in 2024. But how does Nvidia's sector, information technology, measure up against others? Well, let's dive into the details. The information technology sector, which houses Nvidia, has had quite a remarkable performance. In the year 2023, this sector saw a return of 57%, bouncing back from a 28% drop in 2022. This means that since the end of 2021, the information technology sector has seen a 13% increase in return. In comparison, other sectors have had varied performances. Take the communication services sector, for example, which also saw a substantial return of 56% in 2023. However, this followed a 40% decline in the previous year, putting them at a 6% loss since the end of 2021. Similarly, the consumer discretionary sector realized a 43% return in 2023, but this came after a 37% drop in 2022, leaving them with a 10% loss since 2021. On the other hand, the industrial sector had a lower return of 17% in 2023, but their loss in 2022 was also less severe at 5%. This puts them at an 11% increase since the end of 2021, which is slightly less than the information technology sector. Now let's talk about forward price-to-earnings ratios. The information technology sector stands at 26.6. This is higher than most other sectors, indicating a potentially higher future earnings growth. In comparison, the communication services sector has a forward price-to-earnings ratio of 17.4, while the consumer discretionary sector stands at 26.2. The industrial sector has a lower ratio of 19.9, indicating a more conservative future earnings growth expectation. It's evident that the technology sector, where Nvidia thrives, is a strong performer. But remember, past performance does not guarantee future results. Always do your homework before making any investment decisions. But what about those warnings that stocks are overvalued? You might have heard this cautionary statement quite often, especially around the year-end. The concept of overvaluation, in simple terms, refers to a situation where a stock's current market price is not justified by its earnings outlook or price-to-earnings (PE) ratio, making it subject to a price correction. Now, how does this relate to Nvidia and the technology sector? To understand this, let's take a look at the forward PE ratios, which are based on rolling weighted consensus earnings per share estimates among analysts. These forward PE ratios are then compared with average levels over the past 5, 10, and 15 years. 7 sectors, including information technology, which houses Nvidia, are trading at weighted aggregate forward PE ratios that are below their 5-year averages. This suggests that, despite the impressive performance, These sectors are not overvalued according to this metric. However, it's important to note that overvaluation is a relative concept. A stock or sector may seem overvalued in comparison to its historical averages, but it may still have room for growth in the broader market context. Factors such as interest rates, inflation, and market sentiment play a crucial role in determining the value of a stock. So while we hear these warnings about overvaluation, they should not be taken as a universal signal to sell. Instead, they should be considered as a reminder to exercise due diligence, to analyze the fundamentals of the stocks, and to diversify the portfolio to manage risk effectively. And when it comes to Nvidia, despite these warnings, the company's potential cannot be ignored. With its dominant presence, soaring sales, and strong position in the thriving technology sector, Nvidia still holds promising prospects for investors. Despite these warnings, Nvidia's potential cannot be ignored. So, what's next for Nvidia? One might ponder as we delve into the future prospects of this tech giant. As we look ahead, there are several factors that suggest Nvidia is poised for significant growth. Firstly, the global demand for advanced technologies such as artificial intelligence, machine learning, and cloud computing is on the rise. Nvidia, being a leader in these fields, is well positioned to capitalize on these trends. Their GPUs are essential for driving AI capabilities, and their data center and automotive segments continue to show promising growth. Secondly, Nvidia's ongoing innovations in ray tracing technology, a rendering technique that creates realistic lighting effects in video games, is likely to keep them at the forefront of the gaming industry. With the gaming market projected to grow exponentially over the next few years, Nvidia's pioneering position in this field bodes well for their future. However, Nvidia's journey is not without potential challenges. Competition in the tech industry is fierce, with rivals like AMD and Intel continuously striving for market dominance. Nvidia will need to maintain its innovative edge to stay ahead. Furthermore, regulatory hurdles, such as the ongoing scrutiny over Nvidia's proposed acquisition of ARM, could pose challenges. Yet Nvidia's strong leadership, led by CEO Jensen Huang, has consistently navigated such obstacles with strategic acumen. Lastly, on the financial front, Nvidia's robust balance sheet, coupled with strong revenue growth, provides a solid foundation for future expansion. Their consistent investment in research and development further underlines their commitment to innovation and growth. In conclusion, while there may be challenges along the way, the combination of Nvidia's innovative prowess, strategic leadership, and strong financial position paints a promising picture for its future. The tech giant seems well equipped to navigate the dynamic landscape of the tech industry and continue its growth trajectory. Only time will tell, but the future looks bright for Nvidia. It's clear that Nvidia has captured Wall Street's undivided attention. Throughout our journey, we've delved into Nvidia's exceptional track record, its resilience in the face of the market ebbs and flows of 2023, and its promising prospects for 2024, all of which anchor its standing as a Wall Street darling. Let's recap some key insights. Insights. Under CEO Jensen Huang's guidance, Nvidia's sales have skyrocketed, establishing it as a formidable force in the market. The organization has exhibited remarkable adaptability in an ever-changing market climate, a reflection of its sturdy business framework and strategic vision. We also dissected the market patterns of 2023, a period that witnessed a remarkable rebound for equities, with the momentum for profits picking up pace since late October. Amid these trends, Nvidia has maintained its ground, displaying its toughness and capacity for expansion. Looking forward to 2024, Nvidia's outlook is encouraging. As investors grow confident that the Federal Reserve's interest rate hikes are at an end, and with predictions suggesting potential reductions to the federal funds rate, Nvidia's stock seems poised for an upward surge. When comparing sectors, information technology, Nvidia's home turf, has returned 13% since the end of 2021, surpassing. This underscores the vigor and potential of this sector and, by extension, of Nvidia. Despite dire predictions of stock overvaluation, particularly at year-end, Nvidia's performance and forecasts for 2024 paint a rosy picture. While caution is always wise when making investments, Nvidia's robust standing and the upbeat market trajectory indicate that this is a stock worth contemplating for your portfolio. In conclusion, Nvidia's future prospects look bright. The blend of its stellar performance, strategic leadership, and favorable market conditions make it an attractive option for investors. As we march into 2024, Nvidia is unquestionably a stock to keep an eye on. Thank you, In. If you found this video informative, we encourage you to subscribe, like, and share it around. Your support enables us to produce more content like this. Disclaimer: we are not financial advisors. The content of this video is for informational purposes only and should not be considered financial advice.